Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me today for our market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, happy Monday to you.
Happy Monday. Great to be here. It's almost like going to be a summer day today.
I know here in New York City, we're expecting a high of 79 degrees, unseasonably warm for this time of year.
Certainly, certainly. We're only a couple of weeks away from November.
And I understand today there is a focus on Apple.
Yes, it's National Apple Day. Not the phone, actually the fruit that you eat. And what I'm really amazed is I love apples, but when I was growing up, it was just the red delicious apple. Now you have all these things, the Fuji apple, which is great, amazing, like wow, it's always good. And then the Honeycrisp came over and like ate everybody's lunch. So National Apple Day, great day. Have a little bit of cider, and also today happens to be Trafalgar Day, if you're a historian, the Great Battle of Trafalgar in 1805, where Horatio Nelson, who led the British fleet, beat the French and Spanish fleets. And then also, for an actress of my generation, it's Carrie Fisher's birthday, Princess Leia.
Oh, happy birthday.
Yes.
Well, as we kick off the new trading week, we're keeping an eye on a lot of stories, but why don't we start out with a look at the major U.S. stock averages, because we've been seeing a lower open followed by mixed trading, and here we are, we're seeing the Dow Jones Industrial Average off by over 100 points, 200 points actually, and down by 0.6%. Meanwhile, the NASDAQ Composite is also lower on the session, off by about a quarter of a percentage point, and the S&P 500 is now lower by 0.4%, or about 25 points. But there's a lot going on today, and when we look across the markets, we're seeing the 10-year yield for U.S. Treasuries above 4.1 this morning. We're seeing crude oil higher as well, and gold new record highs. So
again.
Yes, indeed.
I'm not long enough.
Yeah, so why don't we start out with a look at what's going on in terms of the market, especially given that we saw record highs last week.
So one of the things I've noticed, and as we talk in the morning early in the session, sometimes the averages are down, but they seem to creep back up to be even or even a little positive by the end of the day. I think part of that is the dynamic that there is so much money coming in on a daily basis that goes into the market, in terms of people buying the S&P 500 index, or putting in the various number of the many ETFs, which are well over $10 trillion of U.S. held ETFs, that eventually they're just buying every day, and if there's not any selling to counter, we end up finishing higher. So that's really been a pattern, that I think it feels like it happens almost every day. In terms of, you mentioned crude. Now, crude had a big correction, over the last couple of weeks, as the feared Israeli retaliation against Iran seems to have not yet materialized. There's a lot of talk about it, a lot of conjecture, and I think part of the reason why it's up today, crude is up today, is because Israel has hit more targets in Lebanon, going after a bank or a financial institution that's apparently an arm of Hezbollah. They also, early in the weekend, they sent drones, and one of their drones appears or apparently was targeted near Prime Minister Netanyahu's second home.
Yes.
And if there's a good way not to have peace talks, is to shoot a missile at the Prime Minister's second home. Nobody was injured. I don't know if it was intercepted or if it was even a mistake, but nevertheless, I think it's going to be tough to really have peace in that region. There's been no sort of overtures of, we'll release the hostages and let's stop this. I guess the view, from Hamas leadership is it the same as the poor suffering civilians, where if they have peace, they'll have to rebuild and you'll have to govern. And that might be a little harder than just fighting from tunnels and launching missiles. I think this, as much as the Biden administration would love to see at least a truce before the election, I'm not sure that's going to happen.
And Tai, you and I, we've been monitoring the situation in the Middle East, and we've been keeping an eye on oil prices, both crude, WTI, as well as Brent, and we've been seeing a lot of volatility when it comes to oil prices, and as you mentioned, a lot of factors that are affecting the price action for that. Of course, we'll keep you updated on what happens in the Middle East and if there is any progress there. But as we head into the rest of this week, we do get a slew of earnings.
Yes.
So we saw volatility last week in terms of the key names ASML, Tai Wong
Yes.
Semiconductor, and this week we get earnings from Tesla, and other names reporting include IBM as well as Coca-Cola, Texas Instruments. We'll keep an eye on what happens in semiconductors. But what are you focused on as we head into the new week?
I think Tesla is going to be at the top of everybody's sort of list of things to watch out for on Wednesday. To see, I think people expect their profit margins to have increased, but we're not so sure about the rest of the report. And I think the stock's down maybe 8% since the robo-taxi reveal, which didn't give people as many sort of details as they wanted. I was really particularly interested that Uber rallied like 10% right after that as Tesla fell, because they thought, oh, phew,
Yes.
the moat around our taxis is still pretty wide. Some other things that I'm keeping an eye on rather, is Verizon. Comcast is also out to see how the telecommunications folks are doing. And it's going to give I think one of the reasons why the market's sort of maybe a little listless this Monday morning is there's really not that much to trade off of right now. We did have, by the way, the Chinese banks over the weekend did cut their prime rates. And they cut it 25 basis points for 1 year and 5 year, which was a little bit more than expected. But the Chinese stock market was really not that impressed. One of the benchmarks was up, the other benchmark was sort of flat on the day. And it goes back to the question of, if you don't see great opportunity, and if your balance sheet is in trouble in terms of if you're a local government or if you're a company and you've borrowed a lot of money and the economic outlook is poor, more money, you don't really want to borrow. And some people call that a balance sheet recession, where even if you pour money in, if you give it to the private sector, you give it to the banks or the governments, they're saying, well, we're going to take this money and improve our balance sheets. And if you do that, you actually don't stimulate the economy like the Chinese government sort of wants to. So ultimately, I think they will have to directly stimulate the economy. And you get the sense that they're watching pretty carefully. Whether or not they're convinced that this is what they have to do, well, we'll find out in the next weeks to months. But as of right now, the exuberance that came with that huge stock market rally has kind of waned. People don't want to sell, so they're fear of missing out on a big rally. But right now, there's not a lot of impetus there as well.
Yeah, it does appear as though there is somewhat of a muted reaction to this. And as you mentioned, after we got the additional measures by China, we're not seeing that much of a gain in the equity markets overseas.
We're definitely not. So this is, and you could see the authorities in China crying, well, we've given so many things. What do we have to do? I think we went over on the show last week what they have to do. You've got to fix that property market, fix the population, and change the mindset of the market and the people. And I think they haven't done that yet. I'm not sure they're ready to do that, because there's some pretty big steps.
And Tai, as you mentioned, it's easier to say than actually do.
Oh, absolutely.
So
Absolutely.
we'll keep you updated on what happens there. But before we move away from earnings, since we started out the show talking about it, I do want to shift our focus on over to Boeing. So in New York morning trade, shares of Boeing are still in positive territory. We earlier saw Boeing shares up by as much as 4%. Right now, they're up by 3%. So Wednesday is going to be a very busy day for Boeing. So not only do they have earnings, but at the same time, workers are scheduled to vote on whether to accept a tentative deal with the union to end their strike, which is going into week 5 now.
That's right. That's right. So with a nudge from the government, I think the union and the and Boeing have agreed to a 4-year, 35% pay hike, plus a big one-time payout, a 12% contribution to the 401k, which is pretty darn good. I've never had 4% contribution in the 401k. And for our readers, for our viewers, if you match whatever the company gives you. If the company gives you 12% and they'll match it, you want to do the maximum match because that money grows over time. That's really, really powerful. If you do that for 10 or 15 years, you'll take a look. Wow, my 401k looks pretty good. If you kept it in, say, the S&P 500. But back to Boeing for a second. When they initially, before the strike, they initially said 4 years, 25%. The union was sort of in favor of it, and it got overwhelmingly rejected, 95%. And this time, the unions sort of agreed to it, and it's a pretty good deal. Essentially, they've gotten almost everything they wanted. I mean, originally they wanted 4 years, 40%. 4 years, 35%, plus a bunch of other kickers is actually pretty close to what they were asking for initially. But they're not getting. One thing they really did want back was the defined benefit pension. I just don't see that happening. That's just too much of a lift for any industrial company, because you're saying, if you retire at 55 or 60 or whatever it might be, and you live for 30, 40 years, I'm going to have to pay you a big chunk every month, equivalent to a substantial fraction of your salary. You can really only get that from the government these days. But interestingly, the union has not been rah rah rah. We've got a great deal, because maybe they're a little bit chastened and they don't want to leave themselves out there. It is uncertain whether or not they are going to approve it. One of the analysts I was reading just before the show, one of the analysts who covers Boeing, said he's been scouring Boeing employee Reddits, and he says that they feel like it feels like it's 75% against, 25% for. But he said these people were really the loud ones who didn't want the original agreement, so there's probably some sort of skew there. But it looks like it might be a very, very close sort of vote. And it's the same day that Boeing comes out with earnings. We know earnings is going to be sort of dreadful. I mean, if I were Kelly Ortberg, I'd get all the bad news out right now. Write-downs, whatever you want, because you can blame it on the previous guy, and if you can get this strike resolved, $100 million, $150 million a day in revenue that gets pushed off later, you're going to look really, really good, and you would expect a pretty decent rally in Boeing. I think if he writes down as many things as he can, and they get the strike over with. But the other thing, though, is it's going to take them some time to really spin up all the manufacturing back again. Maybe get the suppliers who may have laid off people, who maybe have increased jobless claims, to everybody to come back to work. So it will be weeks, if not months, before they really get that assembly line back going. But the market will be really happy to see that, if it happens.
Yeah, I think you highlighted a lot of important points when it comes to Boeing, because with each passing day that goes by for the strike, there's so many implications here, right? We're talking about labor, suppliers, and the bottom line for the company as well. And with new leadership coming in, perhaps if he is watching this, I think he should take your advice when it comes to just getting all of the bad news out there.
That's right, absolutely.
Yeah, because we're talking about how strikes affect the economic data here in the U.S. when it comes to the labor market. And when the port strike first happened between the labor organization and the closure of the East Coast ports and the Gulf Coast ports, we knew how it was going to impact the economy if it had lasted longer. And thank God it ended after 3 days. So
right. That was a very pleasant surprise. Hopefully we get a pleasant surprise here. And I think with the holidays coming out, if you're on strike, you're thinking, I'm getting some strike pay. But if I ask for 40% and they're giving 35 plus, a lot of other nice contributions, let's just take it and move along, and move on. I mean, at the end of the day, it's a pretty good job. I mean, I think the average machinist there probably makes over $110,000 a year. With the new deal, by the time it's done, it'll be $140,000 for the machinists who've been on there. It's pretty good pay, and going into the holidays, you don't need that uncertainty.
And speaking of heading into the holiday season, we'll be paying attention to economic data, obviously on labor, whether it's jobless claims or the big U.S. jobs report, which is coming out on November 1st. And that does remind me that we have a lot that is coming down the pike when it comes to economic data. So we have that jobs report, and of course the election here in the U.S. 15 days away, Tai. Hard to believe.
The election, I mean, a lot of stuff over the weekend that was pretty interesting. The first one was Donald Trump, and I'm going to have to say, this was brilliant. he did a short shift, I guess, in Pennsylvania, where he did French fries. He gave the bags out to the customers. Apparently, there were 1,000 people lined up, hoping to be able to just see the former president and have him hand out fries. And there are pictures all over him, like salting the fries and putting them in the container. He goes, "I didn't touch a single fry." And everybody remember how much of a germaphobe he is, and he loves McDonald's. So I mean, I just for someone like that who's a billionaire who lives in Mar-a-Lago, to be able to come out and say, I'm at McDonald's. It really makes him very, very relatable. He's always loved McDonald's. In fact, one year he bought McDonald's during the pandemic. He bought McDonald's for a football team that had won the national championship. The chefs were on furlough. He said he just bought, $1,000 worth of McDonald's. So that worked out. That was really one of the best sort of public relations ideas I think I've seen in a very, very long time. And one more point on the elections, and this is a little more controversial, is Elon Musk has come out and said, if you are in one of the 7 swing states and you're a registered voter and you've signed my petition, I will give out $1 million a day to one person, I guess chosen at random. And he did that twice over the weekend to howls of protest. Pennsylvania Governor Josh Shapiro, who many think should have been Vice President Harris's running mate, came out and said, "I'm not sure this is legal." It probably skirts the line a little bit, but he says, "Sign my petition. I'm the world's richest man. I'm $1 million, to basically drive up the vote and drive up the interest. Maybe money actually well spent. Is he getting more press doing this, or is he getting more press buying ads? So really, coming down the home stretch, it's going to be really a fascinating election. My thinking and my fear is that we don't find out on election night or the morning after, and we have to wait days or weeks. It's not going to be good for the Republic and not going to be good for the markets.
Yeah, you bring up a lot of key points there when it comes to what we saw out of Donald Trump this weekend and from Elon Musk, and hopefully we do get results sooner than later when it comes to the U.S. presidential election, because we have to keep in mind that not only do we have that election day here in the U.S., but that will be followed by the Fed Reserve meeting, which they moved because of the election. So Tuesday we get the election, Wednesday we have the 2-day Fed meeting with the November rate decision expected on the 7th of November. And very quickly, while you were talking about Elon Musk, I was just wondering how much his net worth is, and he is a multi-billionaire. So in the grand scheme of things, $1 million for him is the equivalent of how much for the average American?
Wow, and I'd have to, I think he's, depending on what Tesla stock is, I gotta think the guy's worth, $225, $250 billion or so. So, for him, I need my HP 12C to not get the zeros all wrong. But $1 million. So, that is $1 billion would be not even 0.5%. So, divide that by 1,000. It's probably like $50 to $100 for the average, for the average American, possibly even less. I do want to calculate that, but for him it's just, and I think he's put $75 million, or he said he'd spend $75 million on a campaign. And if you think about it, it's outlandish. It's sort of very Musk, but it might be actually quite effective, because you buy ads, and who watches network television? How do you know if Facebook is putting your ads in the right place? This is getting him a lot of press and a lot of howls of protest. So actually, I think a brilliant ploy at the end of the day for a man who says, he really thinks that. And he runs X, formerly known as Twitter. He thinks that this is a really important election. He's putting his money where his mouth is.
Yes, absolutely. And if you think about it, we're here talking about it too.
That's right.
So yeah, he is getting a lot of coverage. But before we move on, I do very quickly want to switch our focus to Cuba.
Oh, yes.
So at the end of last week, they lost power, and just to make things worse, they are facing the aftermath of a hurricane as well.
That's right. Hurricane Oscar, I think might have left the island early this morning, but ran through the island. They had lost power before, so nobody knows how Cuba is doing because they're incommunicado. So what's tough about Cuba is almost all their oil is, I'm sorry, almost all their power is driven by oil, burning oil, and they've gotten their oil from Russia and from Mexico and from Venezuela. Russia's had their own problems. Venezuela's had their own problems. Cuba's had kind of a cash crunch, so they can't afford to play Mexico. So their oil, sort of is real. Their oil supplies have been really been down, and they're having trouble with everything, but with their power grid. And you wonder, and I actually don't think it's going to happen. That if you lose power, you've got a terrible a hurricane that does a lot of damage. If that causes the lights a fire in terms of getting a regime change. I think that's unlikely to happen because of how tightly they've controlled Cuba, over the years, the Castro government and their successors. But it does remind me that in 1970, and I read this remarkable book called Vortex. There's a huge cyclone called Bola, I believe, and it killed 300,000 people and actually triggered the events that led to the creation of the country of Bangladesh from what was originally Pakistan. It was East and West Pakistan, and because so many people died, and that storm really created a country. I don't think it's going to happen here, but that was a really interesting book, and how sometimes natural disasters can have really big unforeseen circumstances.
And when we think about Cuba, you might think about their vehicles, their retro vehicles, but when it comes to infrastructure, we don't want anything to be retro in this modern day and age. So in terms of Cuba's power structure, in terms of the electrical grid, what do you think will need to happen to bring it up to upgrade it at this point?
At this point, in truth, I think you need a new government to come to power and say, you know what, Cubans have suffered long enough, and the way to really upgrade the infrastructure and things that haven't been invested in, because what does Cuba do? What do they export? Cigars and people. I mean, Cubans are hardworking, legendarily, sort of literate people, and they're exported to all different, sort of allies of Cuba over the world. But you're not creating anything. And I will tell you, I think someday, if hopefully we're alive to see it. If Cuba becomes sort of open and democratic, that country is going to have a massive, massive investment boom. But I think that's what it will take, because right now the people holding on to power are afraid to really open up the economy, open up parts of the country, because that might weaken their hold on power. So sadly, I think for the average Cuban, life is probably not going to improve in the short to medium term.
Yeah, and Tai, I was just curious about this. So apparently, according to national statistics based on Cuba, the nation said that over 10% of the nation's population left the country, which is the equivalent of 1 million people between 2022 to 2023. So I think that is significant.
It's a lot. It's a brain drain. They've gone to Miami, they've gone to Texas. Anybody who can go will sort of go, because what's the hope in Cuba? I guess you're going to work for the government, and you get to the front of the line, for the rations. So you're losing some top talent. So it's a sad situation, but it doesn't unfortunately look like it's going to improve in the short term. That's amazing. Like 10% of people are left.
Yes, that is a lot given the size of the country and the population. But Tai, as we head into the rest of this week, we do have a handful of economic data releases as well as Fed speakers.
Yeah.
But of course, since we're getting all the earnings reports coming out this week, what is your main focus as we head into the rest of this week?
I think earnings are just going to give the market a sense of well-being or sort of malaise, and it may very well be like how did Tesla do? How did some of the the big telecoms do? How is Coca-Cola doing? But I think the focus here is people are going to be, because it's not a heavy data week. There's going to be a lot more. I think there's going to be a lot of attention actually on the election. I'm going to be watching that closely to see how that develops. And we're now, we're into the very, very end. People have started voting. You're on Twitter and you see people complain about voting irregularities, and you're like, well, when you make that accusation, just give us some concrete evidence. And we haven't seen that yet, but you just hope that it goes smoothly and we don't have the horrible recriminations that we've had the last time.
Yes, it is that time of year, and we are seeing headlines about security when it comes to polling stations as well as the actual data. So we'll keep you posted on that. Ty and I will be bringing you all of the updates this week. So as
Indeed, we
always,
will.
thank you so much, Ty, for joining me
Great to
here.
be here.
And coming up, I will be joined by Alex Vayner, founder and managing partner at Martingale Insights. We'll be right back. Don't go away. Welcome back to Global Money Talk live from the New York Stock Exchange. Harnessing the potential and power of big data is easier said than done. In order to make informed decisions and gain a competitive advantage, companies need to translate massive data into decisions that enhance performance. Well, joining me today for a discussion on data, AI, and delivering real value to businesses is Alex Vayner, founder and managing partner at Martingale Insights. Alex, happy Monday. Thank you so much for joining us. So first and
Thank you for
foremost,
having
we'd
me.
like to hear about your background and your current firm.
Sure. Thanks again for having me. So Martingale Insights is a growth partner for B2B AI startup. And I'm based out of Israel, the startup nation. And the idea is to work directly with founders across the world and help them drive sales, and at the same time create a really compelling strategy that helps them navigate the very complex enterprise sales cycle. So less of a consultancy, probably best way to think of us is a GPS for AI startups in the enterprise jungle, and helping them avoid the quicksand of long sales cycles and the various rapids that they face when they get to procurement, et cetera.
And Alex, I understand that you spent many cycles in the space, so can you give us an understanding of where you think we are right now?
Yeah, I think that overall we are in the midst of the AI revolution. I think that the acceleration actually took another uptick with generative AI coming out, and that's created a lot of buzz. And it's also created a lot of misconceptions in the marketplace. So I think now we're perhaps, to quote Churchill, we're, not at the end, but not at the end of the beginning, but maybe the start of something new. And I think right now, especially, it's really important to understand value and to get away from misconceptions as an investor, understand what are the right moves.
And when it comes to artificial intelligence, this is not something new and actually something that has been around for decades, but it has been getting a lot of attention when it comes to the retail investor. And we've been seeing the AI space become a lucrative investment. But as you mentioned, there are a lot of misconceptions when it comes to artificial intelligence, and you have been in the AI game for a while now. So can you dispel some of the myths out there and tell us what you think some of the biggest misconceptions are?
Sure. So I think probably overall the biggest misconception is that AI is some kind of a magic wand that a company can simply point it, say Expelliarmus, and value is created. And investors often think that simple mention of AI can automatically lead to a solution to a problem. And in reality, in my experience, AI really is like a teenager. There's a ton of potential, but it needs a lot of guidance. It needs a lot of structure. This especially resonates since I'm a father of three teenagers. So it's really not about having AI per se. It's about implementing it strategically and really quickly leveraging it to create value. And value, as most of I think your audience would know, the definition of it hasn't changed. It's still reducing costs, mitigating risks, driving top line growth, maybe mitigating reducing costs and then improving customer experience, perhaps. So what we really want to do as an investor is to look at how is a particular company leveraging AI to do those things. I guess one way to think about it is, one of the AI pioneers, Andrew Ng's famous for saying, AI is the new electricity. So there's a lot of comparisons and analogies, helping people understand what AI is and how it works. But here, I think Andrew's spot on in the sense that yes, electricity transformed industries, but in order for it to do that, it required proper infrastructure, applications, and the same is true for AI. AI needs strategic implementation in order to realize its full potential.
And I really like that analogy there when it comes to teenagers. And I think it's also helpful to hear about that analogy of AI being compared to new electricity. But two terms that just stood out to me, Alex, while you were explaining this to our viewers regarding misconceptions, is strategy and leverage. So could you expand on this?
Sure, absolutely. So the best way I think about is I think of it in terms of the three P's: process, people, and proof. So first, when it comes to process, what I mean by that is AI integrated into the core business of the company? Or is it just a side project because the CEO heard about this new technology and wants to put a line into the quarterly earnings report? Second, it's people. Do they have the right talent? And when I talk about talent, it's not just the machine learning engineers and data scientists, but it's also business translators, people that are going to help connect the data science and the insights to the actual business applications, because that's where real value is created. And I would say the last part is the proof. And what I mean by that is, can you show measurable results? So it's not just help you evaluate whether a particular Fortune 1000 company is a pretender or a real game changer, and really showing how AI is improving efficiency, improving customer experience, creating real revenue drivers, and essentially creating value. And one probably easy, quick fix, that's a tell in my experience, is if the CEO cannot really explain the AI strategy, and is simply using buzzwords like this is a revolutionary technology instead of talking about concrete results, that's a good sign that this is not a company that's creating real value in the enterprise.
That is something that I will definitely keep in mind when it comes to the messaging regarding AI from any CEO. But I'm glad you mentioned the three Ps. People, process, and proof, because I think that is important. And sometimes when we think about artificial intelligence, there's this concern that perhaps people will be eliminated from the equation. But this isn't quite true, is it, Alex?
No, I think that while people will really move and transform from the roles that they do today to different roles, and that will allow a completely different approach to how value is delivered. So it's not that the roles are completely going away. It's that they're getting repositioned and value will be created in a different way. And the truth is that the people that will succeed are the people that are able to adapt and change to the new trends, to the new technology. And I think that's where, as a corporate entity, it becomes really critical to not only implement the strategy of AI and the technology of AI, but also bring in the people. And that means training for your engineers, training for the business people, training for really the executive leadership team on how to best use AI to make the better decisions that will create value for the company.
And speaking of creating value for the company, how can investors separate the contenders from the pretenders in this space within the Fortune 1000?
Sure. So I think one of the ways to do that is really to look at the core KPIs. We talk about KPIs, and really the best way is to, I think of it again as a trifecta, if you will, of a couple of factors. One is operational efficiency. So essentially looking at the metrics like cost reduction, process acceleration, resource optimization. Those are the things that you want to look for in the news, in the earnings reports, that will actually give you insight into whether AI is being leveraged in reality and at scale. Second one is customer impact, right? So this includes any kind of improvements in customer satisfaction, usually measured by customer satisfaction surveys. It can be used by looking at customer retention rates and also at the customer experience. And really a big change in that has been the personalization of the customer experience and how effective that has been. The third factor that I think becomes really important is obviously financial performance. So the idea is, can you actually connect AI to some kind of revenue growth, to some kind of ROI calculation for a particular AI project, or perhaps a new product success rate? So these are the core KPIs and factors to keep in mind. But here's the kicker. I think that these metrics really need context. So a 10% efficiency gain for one industry might mean very little for another industry. So I'm always looking to benchmark against industry standards. So I'll give you an example that's recent that probably most of your audience heard that Netflix had reported really great results in their last quarterly earnings call. And we all know that Netflix is probably one of the pioneers and optimizers of what we call the recommendation engine, right? So this is, if you like this film, you'll also like this film. They really have popularized recommendation engine, and it's actually a really great way for them to actually retain talent, retained customers. And I think that there have been calculations that they have attributed about $1 billion annually, if I'm not mistaken, to in customer retention to the recommendation engine. The idea that I can keep watching and that Netflix knows better than I do myself sometimes what I will like and what I will not. So, so the reference for what constitutes great recommendation engine from Netflix will be very different from, let's say, another industry. As an example, one of my clients was a large US steel manufacturer. Their challenge was to find a recommendation engine for their sales team to increase the share of wallet. So what we did is we developed a machine learning based approach. We integrated alternative data from the outside, and we were able to essentially spot trends. So, for example, if they were selling steel to an automotive manufacturer and the automotive industry took um, an increase in overall production by 20%, well, they should expect that they should increase their total sales by 15, 20, 25%. And if they're not offering that to their customers, that means that likely their customers are getting it from somewhere else. So this is an example of using a recommendation engine in industrial manufacturing and steel manufacturing, but here the numbers are quite different. We expected a lift of about 1%. And for them, that really meant $100 million in incremental revenue. Again, a very specific financial metric that can be measured and that came strictly from the recommendations that were given to the salespeople, specifically as they're engaging with customers. So context is king, knowing the benchmark in the industry and always looking for what is the financial performance, what are the customer impacts that are in play, what are the operational efficiencies that you see.
Yeah, and as you highlighted, there's so many moving parts, and I think metrics do indeed need context. So I think it's very helpful that you brought up Netflix. So earnings season is underway here in the US. We're keeping an eye on how these companies perform and, more importantly, their forecasts and guidance going forward. So whether we're talking about Netflix or a steel company, we know that industries obviously matter when we're talking about KPIs and numbers. For example, if we're talking about CPG companies here in the US that have presence overseas because they're multinationals, it's very important to take into context economic data as well as inflation figures. And I'm sure this comes into the equation when you're doing your analyses. So can you also give us more examples when it comes to KPIs that investors should be looking at to assess how effectively a company is leveraging artificial intelligence?
So I think that the core ones I would say are, again, looking at the value, looking at the indicators in operational efficiency, customer impact, and financial performance. And that trifecta really maps to top line growth, customer engagement, and cost reduction, and in many cases also risk mitigation. So really the best way in my experience for an investor to evaluate this is to look at the industry where they have the best expertise, because that will allow an investor to see more clearly where the value was in fact created and how it was created. So if you're been investing in the steel and industrial manufacturing industry for a long time, you actually know what the financial performance metrics are. You actually know what customer engagement looks like in your industry. So if you see an uptick from a player and you at the same time hear that this particular company is investing in AI, and you hear that their CEO is talking about investments in a very specific way, this is a great sign that probably they are doing things right, because you actually see the improvements in their financial performance, and you can evaluate that against their historical performance. You can also evaluate them against their competitors in the industry. Again, it all boils down to focusing on the context, focusing on the industry that is the most important, that you know best. And that's where I think an investor can really generate alpha with AI.
And you've mentioned industries, so I do want to move on to sectors that you think are ripe for disruption. I understand over at Martingale you have conducted many case studies, which do seem very fascinating because you do outline the problem, the solution, and outcomes that you have analyzed. So give us an idea of which sectors you think are ripe for AI disruption that you think investors might be overlooking.
Sure. I think that perhaps to start, one of the things that's been incredible about AI is how it's impacted every sector that you could possibly think of, from financial services to pharma to industrial manufacturing. I think that probably healthcare and pharma presents one of the most interesting opportunities. It's an industry that's been relatively slow to adopt AI, and the reason for that has been really regulatory hurdles, right? Data privacy concerns, and overall the industry's resistance to change. And I think that all of that is shifting, and you see tremendous amount of new focus in, especially in startup space, but also by large payers, providers, and pharma companies on topics like precision medicine, right? Can you use AI to analyze genomic data? Things like medical imaging, can deep learning neural networks really be used to look at X-rays and MRIs and detect some kind of anomalies, and help radiologists predict more accurately real serious problems that they're investigating. And new drugs, drug discovery, drugs, companies spend billions on R&D every year. And we now know that AI can accelerate the drug discovery process and really predict a lot of target interactions between drugs and optimize drug candidates and improve clinical trials. And that's a huge area that I see beginning to open up. So overall, there is not one sector that I would say is the only one where AI is making the biggest impact. And again, I would say that as an investor, the most important indication is the creation of value. And therefore, I want to be focused on an industry where I can assess value best. So if I am historically investing in healthcare, this is a great opportunity. But if you're really focused on fintech, there are tremendous opportunities in fintech as well. And that's where you as an investor will probably have an edge on most others because you know the industry best. So that's probably a good sense. But of course, consumer packaged goods, what you mentioned, Remy, retail, another area where the industry itself is under attack, as we know, and under a lot of pressure to perform. And of course, AI is being used by retailers to really differentiate between winners and losers.
Yes, I think it was very helpful for you to provide that overview when it comes to healthcare because, of course, there are regulatory concerns involved with this. And I think when it comes to CPG companies, we know there are so many challenges there, especially when we think about what's happened in the US just in this month alone when it comes to port strikes as well as extreme weather related events. And I'm sure that moving forward, we may see more than we have seen in the past when it comes to extreme weather events, and that can obviously affect the supply chain. But before we move on, I do want to ask you about utilities very quickly, because when we look at how that sector has performed within the S&P 500 this year, it has been outperforming most sectors with the exception of information technology and communication services. So within the S&P 500, utilities are seeing a year-to-date gain of about 30%, and that is quite significant. But when it comes to the utility sector, when you're looking at, say, a U.S. utilities operator and you're trying to work on a system, what are some of the challenges as well as opportunities there?
Sure. So I think probably the application that I've seen used the most in the utility sector is what's called predictive maintenance. So usually that means setting up your operations in a way that allows you to see what particular instruments or technologies are operating at their optimal value and which ones may be lagging. And when you see a lag or some kind of drop in performance, being able to proactively address that, that actually saves a significant amount of costs. I think that number two, it's the same customer engagement technologies and tools. So recommendation engine, forecasting, improving the customer experience, even if it's through a ChatGPT type of interface where it's just a portal where a customer can ask a question and get an answer. So those are probably say the customer and predictive maintenance are the two big areas that I see where most of the utility operators have actually made a bet on AI, and I suspect it's beginning to show value, and that's what you're seeing in the market.
And I did have to ask you about utility operators just because the energy consumption based on artificial intelligence is considerable. So this is something that we are keeping our eyes on, especially from an environmental cost as well. So before we wrap up the discussion, I do want to ask you, are there any additional areas of the market that you think are ripe for disruption in relation to AI?
Sure. I would say perhaps somewhat controversially, Remy, that my advice is don't invest in AI. Invest in problems that AI can actually solve. So first, look for companies where you understand the industry and you understand the core challenges of the industry, so you can actually evaluate correctly whether AI is solving problems in a real way. Avoid any place that throws AI at everything. Um, Pay attention to the human side. Are there machine learning engineers? Are there citizen data scientists in the company? Does the executive team understand how AI can be used to make decisions better? And all of those are really strong indicators of differentiation between a player that's simply using AI as a band-aid or a brand enhancer, as opposed to a player that's actually using it to create value. And today, as you mentioned, Remy, earlier, the landscape is evolving very, very fast. So the hidden source of value to me are to find out players that are really adaptable to change. So this is maybe to paraphrase Peter Drucker, right? The best way to predict the future is to invent it. So what are the companies who are not just trying to stay out with the latest technologies and innovation, but which companies actually are creating new technologies, creating value in different ways, customer experiences. And that's where you'll find the visionaries, and that's where you will find value.
And last but not least, before I let you go, Alex, because you highlighted the 3 Ps earlier and you mentioned people, process, and proof, when it comes to the people part of the equation, you also talked about training of people. And we know that talent retention is key for organizations around the globe. But when it comes specifically to getting not just executives, but people in all departments of an organization up to speed in artificial intelligence, what have you found to be the most helpful as well as really effective here?
Sure. So I think the most helpful thing is to make training easier. Make training something that is part of the everyday, part of your business as usual. I think in general, people want to learn. People realize that the technology change is creating a huge gap, and if they don't keep up with the new technologies, their marketability and their ability to provide will drop. So I think people in general are very eager, and it's really just an opportunity to bring the right training to the people. I've seen companies very effectively do that when they're actually doing it not by having theoretical training, but actually bringing in a professional to do real training on their data, solving their problems. So, as opposed to watching a video online that is supposed to help you create a better um, report in Tableau or Power BI, instead, open up a low-code, no-code solution that are now very prevalent in the industry, and let's go and start experimenting. Let's drop some data. Let's see if we can build a recommender model. If we can, let's see if we can make a forecast for a particular industry or maybe for a business unit within your company, and actually integrating the training into your everyday business process, making it part of really your continuous journey, not as something that is aside and separate and something that you need to do in order to be compliant with the regulations. So that's the difference I've seen. More transformational, less informational learning, and transformational learning comes from doing things, not just watching videos and reading things. So the more I've seen companies engage and bring in the training into the company, the more I've seen the results actually stick and show up in the value created for the firm.
Well, it does sound as though when it comes to training, you're also saying that intuition and interaction are key as well. So, Alex, thank you so much for joining us for today's discussion. I think all of your insights will be helpful for a viewing audience. So, thank you and have a wonderful day.
Thank you, Remy.
And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sempro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you for joining us. We'll be back bright and early tomorrow morning. Have a wonderful day.